The silver bullet strategy is very simple. It's a time-based liquidity model. What does that mean? Well, in this example, all we have to do is wait for a prior session's liquidity to be swept, which was this buy side liquidity. Following that buy side liquidity pool, we want to see a break of structure to the downside, leaving a bearish fair value gap on the 1 minute time frame. And you want to anticipate a retracement into that bearish fair value gap for a continuation to the downside, targeting opposing liquidity, which is this sell side liquidity pool. That's it. Trading just one pair for 1 hour a day between the time frame of 10 a.m. to 11 a.m. EST. So simple, even my dog can make money trading this. So let's outline some rules. We're going to be trading this silver bullet strategy during the New York session between the time frame of 10 a.m. to 11 a.m. Eastern Standard Time. For our trading plan, we have to identify the London and Asia session highs and lows. Asia session stems from 6 p.m. EST to 12 a.m. EST. The London session will stem from 12 a.m. EST to 6 a.m. EST, and we include the time frames between 6 a.m. EST to 7:30 a.m. EST. With our vertical line, we want to outline the time period between market opening at 6 p.m. EST all the way to 7 a.m. EST, with these two times in between them at 12 a.m. EST to 6 a.m. EST. And between this time frame from 6 p.m. to 7:30 a.m., we want to identify all the highs and lows inside of the marketplace. So now we have our liquidity pools of highs and lows between the time frame of 6 p.m. EST all the way into 7:30 a.m. EST. We want to identify all the highs and lows between this time frame. We want to anticipate a sweep of liquidity of one of these liquidity pools between this time frame, following that break of structure to the upside, giving a retracement into a bullish fair value gap in this case scenario for that continuation to the upside. And this depiction down here as a bearish example, we have the liquidity pools between 6 p.m. EST to 7:30 a.m. EST. And you can see during the time frame of 10 to 11, we came up to take out those London session highs before giving that displacement lower into a bearish fair value gap for that continuation to the downside, taking out the low of day. Now let's identify what is a fair value gap. A fair value gap is a 3 candlestick formation where there is an imbalance inside of the marketplace. See how we have this middle area here of this 3 candlestick formation? There's a separation between this bottom wick and this top wick. That separation in this middle area is our bearish fair value gap. And as you can see here, we have this 3 candlestick formation going higher, and this separation inside of the middle between this bottom wick and this top wick, that separation is our bullish fair value gap. And the logic behind a fair value gap is as price drops lower, creating this imbalance, price has to come back into this imbalance to rebalance the level before continuing lower. And for the bullish fair value gap, the logic is as price goes higher, we create an imbalance inside the marketplace. So price has to retrace back down into that imbalance to rebalance that level before then continuing to see higher prices. We can use this to our advantage as an entry technique for our silver bullet strategy. So at 9:30 a.m. EST, we're identifying the Asia and London session highs and lows inside of the marketplace. Then from 10 to 11 a.m. EST on the 1 minute time frame, we're waiting for either a high between that time to be swept followed by a break of structure lower, or a low to be swept followed by a break of structure higher. Then we're anticipating price to come back into a bearish fair value gap if we have taken out that high, or come back into a bullish fair value gap if we have taken out that low, targeting opposing liquidity pools. So if we took out this high in this example, we want to be targeting these lows for at least a 2-to-1 R, and if we have taken out these lows, we want to target these highs for at least a 2-to-1 R after price has came back lower, tapping into this bullish fair value gap for that continuation higher. And as price came back higher, tapping into this bearish fair value gap for that continuation lower. So now let's get into some charts and show you some live examples. Looking at the Nasdaq here, we can quickly identify that we have taken out these London session lows as well as Asia session lows. So coming into the silver bullet hour between 10 to 11 a.m., if we can get some type of break of structure to the upside followed by a fair value gap, I want to take that long into these opposing liquidity pools. Let's see what happens. We're now during the silver bullet hour. Let's see if we can get some type of break higher followed by a fair value gap entry back up into these buy side liquidity pools. we finally get that breaker structure to the upside, creating this bullish fair value gap. I'm going to put my limit order inside of this bullish fair value gap, stop loss just below these lows, targeting back above this high for a 3 to 1 hour trade. Price comes down into that bullish fair value gap. Let's see if we can run from here. And we eventually reach up into our targeting just like so for a 3 to 1 hour trade. Very simple. We outlined the sweep of liquidity during that Asia session low. Then we waited for that breaker structure to the upside. We got that breaker structure to the upside, leaving this bullish fair value gap. Put a limit order at that bullish fair value gap, stop loss below the bullish fair value gap, targeting back above these highs for a 3 to 1 hour trade. Very solid, very simple, keeping things very mechanical. Coming into our next example here on the Nasdaq, we have that 6 p.m. to 12 a.m. EST Asia session. Then we have this London session, 12 a.m. EST to 6 p.m. EST. Then we have this 6 a.m. EST to 7:30 a.m. EST time frame. And clearly we have the highs and lows marked out for each one. Now we have our silver bullet time frame, which we are trading on the 1 minute time frame between 10 a.m. EST to 11 a.m. EST, and we can quickly identify that we have just now taken out this liquidity pool following this breaker structure lower. If we can get a fair value gap coming into the marketplace here between 10 to 11 a.m. EST, I am looking to take a retracement trade for the continuation to the downside below these lows. Coming into the 1 minute time frame just before that 10 a.m. opening, I can identify this bearish fair value gap. If we can get a retracement into this bearish fair value gap, I would love to take shorts back down below these lows. So let's see what happens. 10 a.m. opens, we retrace back into this bearish fair value gap, put my stop above that bearish fair value gap just below these lows for a 2 to 1 hour. Let's see how this then plays out. Just like so. If you wanted a 3 to 1 hour, you could have taken out these lows, but I was content with that 2 to 1 hour. Very simple. We identified those Asia and London session highs and lows. Before that 10 a.m. opening, we seen that we came up into that high of day following this breaker structure to the downside, and coming into that 10 to 11 a.m. silver bullet hour, we identified this bearish fair value gap, which we got short at, targeting back below these lows. Very solid. If you guys want more videos like this, make sure you guys hit that like button, as well as comment what you guys want to see next. I'm Markham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me, not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well, at Arkham Trades. Thank you for watching.